Hey traders, welcome back to this week's weekly Forex forecast. We are finishing up May and we're coming into June. And actually, last week was a fairly slow week and the only real moves we got were off of the tariff announcement. Now, this was not just last week. This has really kind of been the story of the entire month of May. In Forex, markets have really seen a lack of opportunities compared to normal. And then when the markets do move, they very often moved off of a kind of overnight tariff announcement out of the US. Last week, good example of this, we saw the euro-dollar pair selling off. Why? Because the court in the US had blocked the tariffs. This caused the dollar to rally. Euro-dollar sold off below its lower bound, and then we got this immediate V-bottom. And that is not the first time we've seen that. And after we V-bottomed, the market does nothing for the rest of the week. So everything kind of takes place on the tariff announcement, after it, and then not much after it. And that really does sum up the month of May. So coming into June, hopefully we're going to get some more volatility in Forex. But we do still need to pay attention to the news which is coming out next week. Although we've got this ongoing tariff announcements and they're causing volatility here and there, kind of sporadic volatility. Next week is non-farm payrolls week, and we also have two interest rate decisions. We have an interest rate decision out of Canada on the Wednesday, and we also have an interest rate decision out of the ECB. They're expected to lower interest rates. And then on the Friday, we have non-farm payrolls. So most of my trading will be ideally done kind of early on in the week, at least into Thursday. If I can be out of trades by kind of Thursday into Friday, that would be fantastic, or at least by Thursday, and then maybe start to look on Friday again for any kind of leftovers which haven't reversed. Usually you get them reversing back inside their ranges the following Monday or Tuesday. That's actually a setup we trade quite often with members called the Monday, Tuesday reversal setup. So going into next week, what I'd like to see in euro dollar is I am still on balance looking to be a buyer. If we can come down, just as last week we came down, we got the tariff news. Now this was very difficult to trade if you weren't awake, in the Asian session, but we came down, we took out the lower bound, and then we reversed back inside the range. That's the kind of setup. Whether it comes on news or whether it comes without news, that's the kind of setup I'm going to be looking for once again this week and was looking for last week. So what I'd like to see is I'd like to see euro dollar come down, trade below the 1.12179. This is where we entered the buy zone, just as we did last week. And this is where the odds of a reversal shift significantly back inside the range. So I'd like to see it come down and actually take out the tariff news low. And this is the low coming into this week, which I'm going to be looking at, pay attention to. And if we take this out, I'm going to be looking for sellers to kind of pull their positions. I'm going to be looking for a reversal back inside the range like last week. Now, one thing to note is you can see what's forming a head and shoulders pattern. So essentially, if we come down, the first thing I'm going to do is look. I'm not going to jump straight in. I'm going to have a look to see what the price action is. And the setup here would essentially be the market turning oversold during the week, a market which I'm really looking to be a buyer in as it currently stands, as we're going to see in the portfolio selection coming up. But also essentially a failed head and shoulders reversal pattern, right? So sellers push it, they break down the head and shoulders pattern, but then they get stuck. They get trapped. The pattern doesn't go anywhere and they pull their positions. And as they do that, you get the liquidation back inside the range. So that's what I'm going to be looking for next week. If we trade down below the 1.10901, I don't expect this to happen, but it could happen after Thursday because of the ECB. But this is where we turn extremely oversold during the week. So it's the second place I can pull the trigger if we get there, although it's not expected. And the third and final thing is you can look for the intra-week breakout back above the moving average, but just bear in mind, in non-farm payrolls week and also ahead of an interest rate decision. So next week, of course, we have the ECB on Thursday and then non-farm payrolls on Friday. Markets and breakouts in those markets during the week can tend to fail more often than if you don't have a news event and you don't have non-farm payrolls. In other words, these markets tend to be kind of choppy during the week. So breakout trading suffers more during non-farm payrolls week or leading up to interest rate decisions. And then actually after the event itself, breakout trading outperforms, right? So it underperforms before the event, outperforms after the event because you've got volatility, you've got a catalyst, so you get bigger breakouts. So that's what I'm looking for primarily, a trade below the 1.12179. That is the main setup I'm going to be looking for a buying opportunity in euro dollar next week. Okay, so moving on to the portfolio selection, and once again this week, US dollar shorts are at the top of my list. US dollar short as a theme worked really well last week, but it was mainly for traders in the overnight session. In other words, euro dollar sold off, it went below its lower bound. That's the opportunity when it turns oversold during the week to look for buying opportunities, and it rallies back inside the range. US dollar Swiss franc, we get the tariff announcement. It rallies above its weekly upper bound, and that is the area where the odds swing into the favor of a reversal back inside the range. And what happens? We get that reversal back inside the range again, more or less in the overnight session. So US dollar short as a theme is at the top of my list once again this week. Alongside that, I'm going to be looking for Australian dollar shorts. And to the long side, Euro long and Swiss franc longs are my top theme. So as the US dollar is weakening, we're not seeing money really go into the commodity currencies because we're getting disinflation and interest rates coming down. But what we are seeing is with those previous EU fiscal rules coming in Germany saying they're going to, unleash spending on the military, etc. We're seeing money flowing out of the dollar, and it has to find a home somewhere, and it's going into the euro and also the Swiss franc and somewhat the pound, but not as much. So that is kind of the dynamic that's still in play currently. As the money comes out of the US dollar, it's finding a home in the euro and the Swiss franc primarily. The third thing I want to look at next week in terms of portfolio selection are Canadian dollar longs. We do have an interest rate decision on Wednesday. The Bank of Canada are expected to hold interest rates. So I'd either like to be involved with the CAD pairs before Wednesday or wait until the interest rate decision takes place and then look for setups after. And the third currency to the short side I'm interested in next week primarily is the New Zealand dollar. Now you could also look at pound dollar to the upside, pound Aussie to the upside, pound New Zealand to the upside. But those are the three that I'm going to be primarily looking for at the top of my watch list to the long side versus the US dollar, the Aussie, and New Zealand. So we're going to be looking in today's video at Euro dollar primarily. We've just looked at that. We're going to also look at Euro Aussie to the upside, Euro New Zealand to the upside. Going to be looking at US dollar Swiss franc to the downside once again, which was a great setup last week for anybody in the Asian session. The tariff announcement came out again, went above its upper bound and immediately reversed. And also Aussie franc to the downside, New Zealand franc to the downside. And finally, US dollar CAD to the downside, we're going to look at in today's video, Aussie CAD to the downside, and I also want to look at New Zealand CAD to the downside next week. Okay, so kicking off the watch list, as always, with crude oil. Now, multiple videos ago, I did highlight the fact we had this major descending triangle breakout, and the target on this is about $45 a barrel. So really, the game plan hasn't changed. Every time we pull back, I'm looking to sell the rip. Bounces, sell the rip. Bounces, sell the rip. So coming into this week, the place I'm going to be looking for a short is above the 64.26. Once we trade above here, I'm going to be looking for these highs. So these highs are important because they're in the sell zone, which is between these two levels. The sell zone is simply where we turn overbought on this market during the week. And once we turn overbought and take out these highs, this is where you can take your trend line all across, or the horizontal line. This is where I'm going to be looking for traders to attempt to break through these highs. And once they try and break through these highs, I'm going to be looking for buyers to start to struggle, start to fade. And that's when you get these reversal patterns developing, double top, head and shoulders, etc. I'm going to be looking for a 1 or 2 day liquidation back inside the range. If we end up above the 67.74, I don't expect this to happen, but above here is where we become extremely overbought during the week. So I can, if I want, pull the trigger a second time on a position above this. And a third and final thing, commodities usually do better with breakouts than Forex pairs. So if we do get this pulling back towards the 64.26, you can look for the bear flag setup, which is a break with momentum back down below the moving average. And then it pulls back kind of towards or into the moving average. And that's the opportunity intra-week for that kind of bear flag Fibonacci setup down to the 57.31. So I can only be short crude oil or do nothing with it. I cannot buy this market next week. Okay, so moving on to the next Euro pairs, starting with Euro Aussie, I can either be a buyer of this market or do nothing next week. I cannot sell this market. Now with the ECB all the way out on Thursday, ideally I'd like to see an opportunity come in Monday and Tuesday, because if we trade below the 1.7429, let's say on Monday or Tuesday, then I can make the statement, look, this should reverse back into its range in all likelihood, in all probability, nothing's guaranteed. But it should do that because most of the money will be waiting until the ECB event itself to actually pile in. So I'd like to see your Aussie coming down, breaching the 1.7429, especially early in the week. And these lows over here are the lows primarily I'm going to be looking at. So I want to see the market come down, enter the buy zone, so we become oversold during the week, especially early on leading into the ECB. And then we see sellers attempting to break below this low here. Once they attempt to break through here, I would like to see them start to struggle. I don't see them go through cleanly. I'd like to see them attempt it, maybe bounce a bit, maybe a second attempt, and then they failing again. And that's where you see the liquidation coming into the markets, because put yourself into the position of anybody who sold this into this prior low, into say Tuesday. They're going to be looking at this and they're going to be saying, we can't break this low. I'm already short. I'm sitting on profits. And we've got the ECB coming out on Thursday. Do I want to hold this into the ECB? Do I even want to hold this overnight? Because if it pulls all the way back and I have to hold it through ECB, suddenly I've got a trade which I'm profitable in at this low, if I shorted somewhere over here, and it could go against me. So you're going to see, most likely, if we do attempt to break this low before the ECB, you're going to see sellers probably booking profits, and that liquidation, that short covering rally, is where I'll be looking to get paid for 1 or 2 days next week. If we end up below the 1.722, this has most likely happened after Thursday. Highly unlikely that happens before Thursday unless some other unexpected catalyst comes out. But it's unlikely we trade down below there. If we do trade down below there, the 1.722, this is where we are extremely oversold during the week in this market. And I can also pull the trigger from below here if I so wish. And the third and final thing is the breakout trade kind of midweek. But, bear in mind this market may just chop around, especially with the ECB on Thursday. So you might be better waiting until after the ECB. And then if you get euro strength from the ECB itself, now breakout trading becomes more attractive because you've got a catalyst, you've got volatility, and that's where you can look for the follow through with a high degree of probability than, trying to trade it before the ECB itself. Profit target next week to the upside in EurAud is the 1.7847. And the third euro pair is Euro New Zealand. Now, really the same principles apply. I'd like to see this market, which is currently just ranging, I'd like to see it turn over sold during the week and also take out this low right here. So we have a prior low right at the buy zone. So I'm going to be looking, especially coming into kind of Tuesday or even Wednesday, can we get sellers attempting to take out this low? And if we do, are they going to get trapped? Do we start to see double bottoms forming, inverse head and shoulders? If we do see that, that's what I'm going to be pulling the trigger on for a 1 or 2 day reversal back inside the range before ECB. If we end up below the 1.85917, we're extremely oversold during the week. When is that likely to happen? If it is going to happen at all, after the ECB on Thursday. I can pull the trigger on a long position from below here, whether I'm long already from here or not. And the third and final thing is the breakout trade, but once again, probably best to wait till after the ECB to see if you get the rally on ECB. Now the catalyst has come out. Now breakout trading has a chance to outperform, and then you can look for the follow through post ECB into the profit taking target at the 1.9253. Okay, so moving on to the Swiss franc pairs, starting with US dollar Swiss franc, and I can only be short or do nothing in this market. Last week we had the big rally up on the tariff announcement. Where did it go to? Its upper bound, traded above its upper bound, and where did it reverse from? Its upper bound. And then down here, I think over here, after we started the reversal, we picked up some steam to the downside because the appellate court overturned the original ruling, which banned or said that the tariffs were illegal. So we kind of had that whipsawing around the tariffs last week. So what I want to see pretty much exactly the same thing, although it'd be great if it didn't happen on the tariff announcement this time. I'd like to see, or even if it did happen on the tariff announcement this time, at least in the European trading session, but I'd like to see this coming up, taking out the prior high, and this is the high in the sell zone that I'm going to be looking at to see if sellers start to fail, just like they did last week. And I'm going to be looking to see if we can get that 1 or 2 day liquidation back inside the range, just like last week. So this basically ends up just ranging around or chopping around. So that's the primary setup I'm going to be looking for in real time with GMT members next week. If we end up above the 0.84314, I don't expect this to happen. But if we do, we turn extremely overbought, and the odds of snapping back inside the bigger range are even higher than from the original blue range. So it's the second place. If I wish, I can pull the trigger on a short position. And of course, you can also look for the intra-week breakout. But again, US dollar Swiss franc, non-farm payrolls week, breakout trading next week might be a bit more difficult. Range trading or mean reversion strategies tend to outperform in the lead up to interest rate decisions, and also in non-farm payrolls week, and then breakout trading, after the events themselves. So if you do get the breakdown, and maybe this comes, I don't know, after the ECB even, right? We see that strengthening coming into the euro or the Swiss franc. then you can look for that Fibonacci trade down into the profit taking target, the 0.81107. But again, just bear in mind, if you're trading breakouts next week, you may find yourself getting chopped about a bit more than normal. So be careful breakout trading next week. Next is Aussie franc. I can either be short or do nothing. I cannot buy this market next week. And I've zoomed out a little bit so you can see the big liquidation we had down here. And everything since then has kind of just been a correction or a flag of this big sell-off. So what I'd like to see is Aussie franc coming up, entering the sell zone. This is where I'm going to begin to look. We do have highs just below it, so we could end up kind of just, failing at these highs and just kind of wicking the sell zone. I will look for that, a failure above these highs. But if we break past these highs, we kind of go straight through with momentum. Then the next prior high would be right here. So I'd be looking for a price to come up, attempt to trade through this. And I'll be looking for buyers to get stuck, to get trapped, to paint those reversal patterns on the charts as that happens, and then looking for that 1 or 2 day liquidation back inside the range. So that's a primary setup I'll be looking at next week. If we trade, although it's not expected, above the 0.5439, and I'd be using this high right here to try and time any reversal. But if we do trade above here, this is the second place I can look for a 1 or 2 day reversal. And the third and final thing, of course, the intra-week breakout trade. But, next week, I would be cautious with that, personally speaking. If you are looking for that to the downside, the profit taking target is 0.5204. And the third Swiss franc pair is New Zealand franc. Again, I can only be short this market. I cannot buy this market under any circumstances. Very much like Aussie franc, we had the big liquidation, and then we've just been consolidating this, correcting it. So I'd like to see the market come up, take out 0.4971. This is where we enter the sell zone and become overbought during the week. And this is the high right here that I'll be looking at. So first and foremost, there is one just below it. So again, we could fail here and just wick the sell zone. So I'll be looking for that first. But assuming we just trade straight into it with momentum, this would be the high I'd be looking at for a key area of support. A place in the past, preferably, where price reached, peaked, and then got pushed lower. So that in the sell zone as confluence is where I'm going to be looking for a 1 or 2 day reversal to the downside, back inside this range. If we end up above the 0.5043, we are extremely overbought during the week. I don't expect it to happen. If it does, it is the second place I can pull the trigger on a short position if I so wish. And the third and final thing would be the break down below the moving average with momentum. It'd actually be somewhat of a head and shoulders breakout as well, you can see here. And the pullback for that kind of bear flag setup into the sell zone, profit taking target is 0.4828. Wrapping up the Forex universe then with the Canadian dollar pairs before moving on to gold and silver. What I'd like to see is US dollar CAD coming all the way back up and retesting the prior high right here. That would be a really nice setup because then we're entering the sell zone above the 1.38554. And this represents a really nice high and even potentially an A, B, and a C, where we can start to look again for buyers to pull their positions, to run out of steam. And I'm going to be looking for that reversal back inside the range. Now, again, with the Bank of Canada on Wednesday, if we get this kind of on Monday, that's going to be a great setup because it gives 2 days for this to kind of pull back inside the range. And why would it most likely do that before an interest rate decision? Because most of the money is going to come into the pair on the interest rate decision itself. And you're going to have people who are making money before the interest rate decision pulling their positions or booking their profits, causing a reversal before the event takes place. So they're not, on the wrong side of it and they can just have their profits before the event itself. So I do like that setup. If we don't get it before Wednesday, then I'll look for it after Wednesday. If we end up above the 1.39708, which is possible on the basis that we have the Bank of Canada meeting next week, this would be the second place I can pull the trigger on a short position. So maybe nothing really happens. Then we get the BOC on Wednesday. Then we get a big move up because maybe they cut rates unexpectedly. Again, I'm not calling for that. I'm just saying hypothetically, let's say that happens. You see a huge move up in US dollar CAD. It trades above the 1.39708 and the move is so sharp that we're just kind of sitting out and saying, okay, let's just see what happens. And then it kind of starts to stall out around here. Then, in that kind of scenario, post the Bank of Canada, you can look for that reversal and that would actually be a good setup. And very often, especially if you're not involved originally, on interest rate decisions. If they do take out second upper and lower bounds, it's a very good opportunity for a first position, initial position. So those are the main things I'll be looking at next week. The third thing you can look for is the breakout down below it. But again, breakout trading in the CAD pairs is primarily going to be beneficial or most likely to outperform after the BOC itself, once the catalyst takes place and then you have the volatility. So let's say you have the BOC on Wednesday, you get the initial sell-off, then post the BOC on Wednesday, you could probably look for that bear flag setup into the profit taking target, in this case the 1.3624. Next is AudCad, again zoomed out just to give the context of this liquidation and the correction. What I'd like to see in AudCad is a pullback, a break above the 0.89149, and I believe it was over here. I believe this was the double top that we traded in real time with GMT members right here. It comes up, it entered the sell zone that week. We took out the double top high, and that was a short we took. I can't remember how much we pulled out of this, but it was a good trade. That's the exact kind of setup I'm going to be looking for once again this week, but I'm going to be waiting for it to trade above the 0.8914 first. And then, preferably, this high over here would be great. In this case, it kind of made its own high and then double topped, but this high over here would be the primary high I'd be looking at buys to try and break through. Starting to fail, and then the double top reversal to the downside. If after the BOC we get an explosive move higher for whatever reason and we end up above the 0.9002, and we have a really nice high just here as well for timing, any kind of reversal, this would be the place I'd be looking secondarily for a 1 or 2 day reversal. So again, maybe I'm out of it, nothing's happening. We get an interest rate cut, this explodes higher. I kind of sit the first one out because, this is a bearish catalyst for the CAD. We then, the next day, take out the 0.9002, initial position after the BOC for a 1 or 2 day liquidation back inside the bigger range. That is a scenario which is very possible, although, if they cut rates I'm talking about, although I'm not saying a rate cut is necessarily on the table, but it's very possible if they did cut rates, you could see something like that, and that's a setup I've traded many times before with GMT members. So that's the second thing I'll be looking for. And the third and final thing, which again is probably best looked at from after Wednesday, if the market does nothing and then you get the sell-off on the actual BOC, look for that pullback and bear flag into the profit taking zone below the 0.8739. And finally, we have New Zealand CAD before moving on to gold and silver. New Zealand CAD is very simple. Every time New Zealand CAD pushes higher, I've been looking to sell it. Pushes higher, looking to sell it. Pushes higher, looking to sell it. Pushes higher, looking to sell it. So once again, if we can trade above the 0.82705, there's a high right here. If we blast straight through this with momentum, this would be the second high I'd be looking for. These two areas here, first and foremost here, if we start to struggle, I'll be looking for a short. If we blast straight through, then here. These are the areas I'm going to be looking, especially if we can get this kind of on a Monday, that would be even better, for a 1 or 2 day liquidation back inside the range. If we end up above the 0.8353, in a similar scenario discussed in the previous pairs, it is the second place I can pull the trigger on a short because we become extremely overbought. And the third and final thing, again, probably best left until after the BOC. You're kind of chopping around, and then on Wednesday, you get the sell-off, kind of breakout of this kind of range here, sort of contracted. And then that pullback, maybe it tests the underside of it, kind of hugs the moving average. You can look for the sell-off into profit taking zone, which is below the 0.81045. Either way, I can only short this market next week. I cannot buy this market next week, regardless of what happens on the BOC on Wednesday. Okay, so wrapping up the video, as we always do with gold and silver, and coming into this week, gold and silver in terms of my bias are pretty simple. I can only buy these markets. I cannot sell them. I'm just looking for buying opportunities. Why? Because in the commodity section of Hedge Dash, they are outperforming, but also the dollar is weak and I have a bearish bias on the dollar. It's my #1 short theme heading into next week. And so I don't want to be selling gold and silver. I don't really want to be selling gold anyway, but gold and silver, I certainly don't want to be selling when the dollar is weak, because that's when you can get explosive moves to the upside. So any pullback in gold, and I'm going to be looking for a breach of the 321452 and a trade below these lows here. These are the lows that I'm going to be looking for sellers to start to fail at, and I'm going to be looking for them to pull their positions and a nice reversal like we saw last week into the range. And that is where I'm going to be looking for a 1 or 2 day liquidation to the upside. If we end up below the 3135.85, I don't expect this to happen, but for whatever reason, if we did end up here, I could pull the trigger on a long position again. And of course, commodities work better with the breakout trades anyway, so any kind of pullback, that breakout, it's almost trend lining down here as well, you can see. You can look for that pullback, moving average follows it, and you can look for that bull flag setup into the buy zone next week. The profit and take it target in gold, 3371.87. But I can only buy gold next week. I cannot sell it. And last but not least, we have silver. I can only be a buyer of silver. I cannot sell this market next week. So what I want to see is I want to see it enter the buy zone. It enters the buy zone below the 31.29. Then I'm going to begin to look. Sorry, the 31.39. Then I'm going to begin to look left. Well, there's not much going on here. Here's the next low. So ideally, I'd like to see this come all the way down, test this zone quite deeply, and trade into this low here. This is the low. Primarily, I'm going to be looking for sellers to fail and looking for a 1 or 2 day liquidation back inside the range. We may just come into this sell zone if we do enter it and we don't get all the way down here. You know, you can start to look for double bottoms anyway. So it starts to create its own support and then fail, right? That's the first thing. And then if we come all the way down here, that's the first low I'd be looking at sellers failing at. The second thing is if we end up below the 29.80, something very significant has happened. There's a nice prior low over here to time any kind of reversal from. But this would be the second place I could pull the trigger on a long, but I don't expect this to come down to here. It's just very unlikely it happens. But if it does, I can look again at a potential long position. And finally, because we have a weaker dollar, especially with the commodities, you can look for that breakout. And breakout trading in commodities always tends to work best anyway, but it tends to work best when you've got a weaker dollar. You can look for that bull flag setup into the moving average and the rally into the 34.56. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.